So I wanted to caution you against placing trades on a Friday, and there's a reason for that. We're going to get into a lot of the reasons why, but essentially, Friday is a tough day to trade. If you're going to place a trade for the day and close, I'm not talking about that. I'm talking about people want to place a trade, say, and they want to hold it for a couple of days or weeks, and then they place the trade on a Friday. I want to show you some interesting things in case you do decide to go against my judgment and trade. I want you to just see a lot of the things that happen or that I've seen that happen on Fridays and why I'm against placing trades on a Friday. So what tends to happen, even if you say, okay, I'm going to place it in the morning, what tends to happen essentially is that if you do say I'll place it in the morning and then hopefully it will rally off onto the weekends, what tends to happen on Fridays is there's usually a huge movement. When there is a huge movement, there's usually a huge movement and then just a major consolidation, or sometimes it's a consolidation and then it's a major movement. But on most occasions, what tends to happen usually is that on Fridays there's just a range, unless it's the non-farm payroll or these other news. Essentially, the markets just range. So what you end up doing is you end up getting in a position, and then it goes up, down, and it just ranges for the day. And the dangers with that is that the markets will close, and when the markets open, they usually gap. And what I mean by that is that they'll close on on Friday, right? Here in Africa, that's around nearly 11 p.m. They will close, right? And then you would have set your stop loss, usually it's 30, 35, 35 pips. And the markets will open, and when they open, what tends to happen is that a few candlesticks form and you can't control your positions with the broker. So you watch your position get jumped over, you watch your stop loss get jumped over, and it's actually possible to lose more money than your stop loss as price moves down, because they can only get you out of the position once the markets are fully opened. So what you'll see is you'll see your stop loss being jumped, and if obviously if you don't set stop losses, that's even worse. But what you'll tend to see is that your stop losses will be completely jumped, and brokers I've seen tend to love that jumping manipulation during the weekend, because essentially if this rally was going to go up, if you said yes, it's news. If there was going to be a huge rally, why do we see this huge jump before this huge rally? Why wouldn't we just see where price opened here and then we let the rally continue? There's always a huge jump and a funny looking candlestick where the spreads will be down here and then the actual price will be all the way up here, which is what tends to happen. You'll find the spreads all the way down here and the price remains here, and so they take advantage of that opening and closing of the markets, and then price continues the way it was going. So that's a huge danger in closing a opening a trade on a Friday and then letting it run over the weekend. Now that's not to say you can't. If you get in on a position like this and then Friday evening it closes and you're up there, I'm not saying close those kind of trades. The trades I'm talking about are the ones where you open a trade at a support area and you set a stop loss and it hasn't moved. If you place the trade and it's moved up and you've put a stop loss, that's fine. I'm talking about people who are placing a trade at the support, they put a stop loss, and price hasn't moved. It's just consolidated. You'd rather do yourself in favor and close it, close the position entirely. Even if you put a stop loss, that won't help because, as we've seen, the brokers just jump the stop loss anyways. So you have two options: either completely close it and get in on Monday when the market's open, or you can open the opposite position, right? So, for example, what you would do here is if you do have a sell, you would essentially just, if you do have a buy, say you open a buy for 2 lots, and then you'd also sell for 2 lots. Essentially, what that would do is that once markets do open, you're able to close out both positions before this rally goes up. So you will make money to cover your weekend spreads and the jump or the stop loss being taken out. and then essentially you'll start off at zero completely when the markets open on Monday morning. That's also an option. But the better option is to just leave it alone. And so you're probably wondering, well, why not trade the gap strategy, right? That's also, I mean, you could say, why not trade the gap um, if this happens? Because someone will probably be arguing and saying, yeah, but I could always, when the market gaps like here, I could always just buy and make money on that move up to cover my stop loss being hit. The gap strategy doesn't work as well as it seems. A lot of people usually market this strategy as a scalping excellent strategy, and it's not always the case. It's actually a very dangerous strategy, if you ask me. And I've seen it play out multiple times. It was actually one of the first um, strategies I used, and it's quite simple. That's the benefit of it, but it doesn't work as well as you would think. And I want to show you why it's quite a dangerous strategy. So you'll see, for example, on this example here, you'll see, yes, if you had placed a buy over the weekend, right? Say you placed the buy on Friday morning or Thursday evening, Thursday morning, price is going up and then you leave it over the weekend. Nothing wrong with that. Price will just keep going up and then you'll make your profits and you'll get out. I'm not talking about those kind of trades. Let me see if I can show you. All right, so here's um, another gap position I wanted to show you about. So essentially, if you had bought, say you trade the crossover moving average strategy divergence, you got in during the week, it would have jumped and done really, really well. Can you see? It would have jumped exceptionally high and you would have done really, really well. And you probably would have been asleep or you wouldn't have noticed this because this would obviously happen in the early mornings around 1 a.m. But essentially, you would have done really, really well if you traded the gap strategy. But the problem is that's if you had bought here, because this is a failure of the gap strategy. Essentially, what the gap strategy says is that when there's a gap, it will be filled. So since there was a gap up, you'd be looking to sell, right? You would start selling and then look at how much you'd lose, right? So if this was the use of the gap strategy, you would have essentially sold once the markets have opened. uh, Most of the times people who trade gap strategies don't have stop losses, or at least they have very tight ones. And a lot of them just don't have stop losses because they say it's very volatile and markets will always go back to fill the gaps. That's not true. Or if it is true, usually the markets go so high that you'll lose a lot of money in the process. So you would have essentially sold and then look at that. I mean, if you weren't trading with the stop loss, you would have had your entire account blown within minutes, right? Especially if you like went to the bathroom or something, would have had your account blown in minutes. Let's see anything else. Okay, I think I do have other examples, but on another chart. So let's see this chart. Right, here we go. So here's some more examples of the gap strategy. So if you were selling here, you would have been fine. If you had sold on a Friday here, I would have no problems with you, especially if it had started moving down, right? It would have started moving down. Um, markets would have opened, you would still be in profit. And then obviously it would pull back a little bit and then jump up. But then here's another failure of the gap strategy, because the gap strategy says markets always come back to fill the gap. So markets jumped up, right? So we'd be looking to fill that gap. But look at this push up for hours and hours and hours. All stop loss were hit. Like the strategy isn't as good as people make it seem. And I want you to know that, especially when you're considering someone who gives you the rebuttal and says just trade the gap strategy if you have positions over the weekend. So here's another failure of the gap strategy. Okay, let's go back. Here, if you had bought on the Friday or Monday, um, price would have gapped up, right? And then that would have worked in your favor. And this is actually a good example of one that did work. But look what would happen if you had placed a trade. Hopefully, you would have put a take profit close here, and then been taken out. But if you hadn't, look at the huge spike and manipulation that happens here. And by the way, this is also close to market opens. That last candle we saw on that other pair, on that other New Zealand, I think it was the New Zealand pattern we just looked at with that huge candle. This is the kind of manipulation you'll find when the markets open. And if you don't have a stop loss or you are over leveraged, these are the kind of candles that kill you. And the markets open at night, so you'll be fast asleep while your account's being blown unless you're awake. And even if you are awake, it happens so fast you won't even realize what's going on until it's too late. So you're probably wondering, can you trade the gap strategy? Let me just show you from my notes. Because I did have notes on the gap strategy. This was when I was collecting notes for learning how to trade. And okay, let me try share it for you guys so you can see. Yeah, so if you do decide to trade the gap strategy, here's essentially what they're saying, which is that when the markets open here, say the markets closed on Friday, right? This is what would happen. Markets will close on a Friday, open here Monday. Essentially what they're saying is the gap will always be filled, that you can make money on this huge fall. But what they don't tell you on these charts is that this is probably a 5 minute or the 15 minute. So essentially you are scalping. And the problem with that is that in order to make real money, you'll have to trade really big sizes. And if you're wrong, that could really eat at your equity really quickly. So essentially, if you're wrong, number one, your stop loss will lose you a lot of money, even if it's really, really tight. The fact that you have a huge position, um, when price is moving against you, that could really, really work badly for you, especially with spreads. Yeah, so that's it talks about the New Zealand US dollar. We looked at the New Zealand pattern, the New Zealand pair just now. It's one of the charts I showed you. Let me just see. Yeah, it's one of the it was the first chart I showed you, the New Zealand US dollar, where we saw that huge gap on the support area. So be very careful. You'll see these huge gaps on the New Zealand US dollar. Right. So right. Let me just get this ready. Okay. So we've looked at the New Zealand US dollar, right? They explain to you a bit about gaps, gap up, gap down, but they don't really tell you about market manipulation. And a lot of the times you'll hear that gaps are formed because of news events that happen over the weekend. And that's not necessarily true because if it were the case, why is it and you'll see things a bit differently. But even if it was news, markets tend to reflect the prices later on and not immediately. And I was having an argument with my sister because she's more into stocks, and she was saying that she doesn't see many gaps in the stock market, the JSC that is, um, the Johannesburg Stock Exchange. JSE, is it? Yeah. So she was saying there's not many gaps because they don't see as many gaps, especially with the South African stock market, because their brokers show them the exact price when the market opens on Monday, right? But with Forex, you'll find that they basically hit your stop losses even with the gaps, and they show you that they've hit your stop loss with the gaps. But she was saying it's completely different for them. That doesn't happen, and that's what fair, in my opinion, that's what fair brokering is to me, which is that, listen, if you had a, say you had a, how do I say it? I mean, it's two ways, because if someone had essentially sold here, right? Say someone had sold here, and then price jumps up and wakes up here, you can't expect the broker to immediately reimburse you only the small amount you've just lost. So sometimes, and be careful of it, sometimes they won't just hit your stop loss, they'll take more than the stop loss. So you want to be really careful about that. And yeah, here's the interesting thing. Sometimes gaps aren't filled that day. And that's a misconception which happens with gap trading. So for example, you trading the gapping strategy, this is Friday, right? Markets close, markets open on Monday, and then you start selling. This is what happened over weeks. Can you imagine holding a losing position for weeks on end? Now, you probably would have had your stop loss hit, and then you would have already forgotten, even though these notes say a few weeks later the gap was filled, you would have already forgotten about the big loss you've taken. And what tends to happen also with gap trading is that a lot of people are hopeful. Price will move against you and will continue moving against you, and you'll continually hope that it's going to change the direction because you're told gaps are always filled. That's not true. Gaps are not always filled, and this is weeks later. And then what happens when we've opened a huge gap like this? Can we see that this is another gap the next Sunday, right? Friday, we closed here, we gapped here Monday morning. How are you saying that this is filling this prior gap? What's filling this gap here? So are you saying this price is going to move up and fill this gap here? The strategy isn't too sound. So you want to be very careful when you're continuation gaps, and then so when the gaps fail, they're given a fancy name, which is a continuation gap, which is essentially Friday, markets close, then Monday, they open with a huge gap, and then they say it was the uptrend, so it wasn't going to get filled, which, and then there's the downtrend gap. It's too, it's even worse than support and resistance trading, in my opinion. So, here's an example of where it does work. But all in all, it's not a good it's not a good strategy, especially if you want to be a scalper. You'd rather avoid it at all times, right? You can use it, as my notes say, you can use it as a confirmation signal. So say, like I said, you've already been in a position and it's moving up, and then the market's open in a gap position and it's going up in your direction. Then you're fine. Even if it fills the gap, it will usually fill the gap and then continue going in your direction. That's fine. So I wanted to just warn you about gap trading, and if someone tells you about it, I don't think it's a safe trading strategy. And that's just in Forex. I'm not talking about it in the stock market because that might be a bit different.